When a disaster strikes, such as a wildfire, your first thoughts are safety, family, and the roof over your head, not taxes. Whether it is a hurricane or an unexpected flood, the IRS can actually offer a financial lifeline after the storm. This relief is more than a delay. It can create breathing room and sometimes put money back in your pocket. Understanding how disaster tax relief works is a vital part of any recovery plan. Handled right, it eases the burden so you can focus on rebuilding your life and community. Imagine a storm leaves your home damaged, your business closed, and your records scattered. In that moment, filing quarterly estimates or your annual return feels impossible. That's why these provisions exist. A federally declared disaster is a specific legal designation made by the president, typically after a governor's request and FEMA's assessment. The declaration lists eligible counties, parishes, or local jurisdictions. Relief applies only inside those lines. Not every severe event qualifies. Scale and severity matter. That's what triggers federal tax relief authority. FEMA announces first. The IRS quickly follows with news releases and guidance on its website. Under the Tax Cuts and Jobs Act, personal casualty losses are suspended through 2025, except for losses tied to a federally declared disaster. Your first step after any event: confirm the federal declaration. Visit FEMA's disaster page and the IRS disaster notice page, then verify your state and county. Keep a copy of the announcement in your records. It's the key that unlocks IRS disaster relief. Once a declaration is in place, relief arrives in two ways: automatically or by request. Understanding the difference is crucial. Automatic relief usually grants extra time to file returns and make payments for everyone in the disaster area. The IRS identifies addresses in the zone and suspends failure to file and failure to pay penalties for the relief period. Automatic postponements often cover individual, corporate, payroll, excise returns, and quarterly estimated payments. If relief runs to September 15th, a June 15th estimate automatically shifts to September, providing instant cash flow relief. Requested relief applies if you're outside the zone, but your critical records are inside it. Call the IRS Disaster Hotline to request an extension. Be ready to explain your situation and document why you need relief. Example: a hurricane strikes Florida on February 1, 2026. The IRS could set a uniform deadline for affected counties. Returns and payments due on or after February 1 may be postponed to July 15, 2026, including the April 15, 2026 filing deadline. No separate Form 4868 is needed for this automatic disaster extension if you're in the covered area. Casualty loss is not automatic. You must claim it with IRS Form 4684. You should also gather documents, perform calculations, and report accurately. Document the damage, subtract any insurance or other reimbursements, and complete the form carefully or with a pro's help. Choosing to claim on a prior year requires an amended return. Form 1040X. The IRS offers the opportunity. You must actively claim it. A casualty loss is sudden damage or destruction. Start with the drop in fair market value and your adjusted basis. Use the smaller number. Subtract insurance and any other recoveries. What remains is your potential loss. For personal use property, reduce each loss by $100, then total all losses for the year. Next, subtract 10% of your AGI. Only the amount above that threshold is deductible. Example: $20,000 loss minus $8,000, 10% of $80,000 AGI. Times $12,000 deductible on Schedule A. That deduction lowers taxable income and can produce meaningful savings. You can claim the loss on the current year return or amend the prior year. Choose strategically. Amend last year if that bracket was higher or you need cash fast. 1040X often yields a quicker refund. If this year's income will be much higher, waiting may produce a larger benefit. A tax pro can model both paths. Confirm eligibility at the IRS Tax Relief in Disaster Situations page. States, counties, and postponed deadlines are listed there. Cross-check FEMA's presidential declarations on its website. Your checklist: confirm your county, note new deadlines, document damage, track insurance, prepare Form 4684. Questions? Call the IRS Disaster Hotline or work with a qualified tax professional. Right now, check irs.gov to see if your area is listed, then start organizing. Control brings relief. Subscribe for more tax tips.